traders, Tom Hayes and Phil Flynn. Phil, I got to throw this to you first because the high price of energy is very much at the forefront of everything that is propelling stocks higher. Just yesterday, Lululemon said, you know what, we have to admit it, 75% of our products, our leggings, come from petroleum products because of course, nylon and Lycra. But talk to me right now and our viewers about what is going on here as we see there are companies that are benefiting from this, like ExxonMobil, which finally popped back up of $100 a share.
There is. And, you know, I love ExxonMobil, Liz, and I just have to say, finally, it's been a long road for ExxonMobil, but they're back. Make no mistake about it. I mean, ExxonMobil, its profitability is great. I like Chevron, all the refiners. But you're right. The increase in petroleum products. Listen, a few years ago, these companies took petroleum products for granted, right? They were all on the green energy movement. We're not worried about that old fuel. But this is a reminder that fossil fuels plays a much deeper part in the economy. We're not just talking about transportation and heating and all that stuff. We're talking about production, manufacturing across the board. And to think that it doesn't have an impact on inflation or the economy, I think that's a wake-up call. I kind of listened to Janet Yellen today. It's like, Janet Yellen, is this the same Janet Yellen that was Treasury Secretary? You know, I mean, where she tries to tell us that, you know, spending money from the government doesn't raise inflation and printing more money. She used to have a different tone when she was the Fed chairman. I don't know. I don't know if it's the same Janet Yellen. I have to go back and think about that.
Well, yeah, you know, I do find that interesting because, Tom Hayes, when you superimpose Target over these high energy prices, and that's why we kind of put these two together at the very top of the show, Target is unfortunately on the short end of how consumers are being forced to change their behavior. And that first line of defense is going to be that they're going to pull back on extra spending because they do need to drive to work. They do need, of course, to, you know, fill their gas tanks, right? But tell me, the energy sector, what opportunities do you see knowing what we know about inflation now?
Yeah, well, Liz, I think that one of the most important things that Secretary Yellen said is that 1/3 of inflation is attributable to new and used car prices, and that's attributable to the chip shortage. Adam Jonas of Morgan Stanley put out a note late last week that basically called the end of the chip shortage for autos, referring to his team on the ground in China. Taiwan Semiconductor has 50% of auto chips. Their production is up 60% year on year. As those chips get to the OEMs who have 2 years of backlogs, inventories are maybe at 10 to 15% of where they need to be, where they've historically been. What's going to happen is used car prices, which went up 60% in the last 2 years, only dropped 6% recently. They're going to collapse. New car prices, the supply is going to come on. It's going to stabilize new car prices. And the biggest beneficiaries, Liz, are going to be the auto parts suppliers that no one's looking at. They've been left for dead. Companies like Borg Warner, Magna International, Cooper Standard is a special situation, does all the sealing for cars. That's a major position for us in the last couple of weeks. So we think there's opportunity here with these companies trading at 7.5 times next year's earnings. As those chips come in, they sell their parts to the OEMs, to the original equipment manufacturers. As those chips come in, production's going to go up. They're going to be selling their parts like crazy.
You know, it was interesting. We just had the Cars.com CEO on last week, and he said the exact same thing about the OEMs. But Phil, as we look at the broader market here, we've been down, we've been up, we've been down, we've been up today alone. So once again, we see this herky-jerky behavior, and it does make you wonder, when do we have just a solid day? And I don't know if we need it, but I mean, the market is a big voting machine, and it's voting kind of this way, doesn't know which way.
Right. One of my clients calls it a Joji sandwich. I don't know. It sounded like Tom wants to buy a new car. He's making a new case for his wife. I got to buy a new car. The prices are coming down. But no, I mean, listen, you know, I was on the show with you a couple weeks ago, and everybody was so doom and gloom. And everybody goes, oh, my gosh, we haven't hit bottom yet. And I was looking at the market. I go, you know, we're at some pretty strong technical support right at that bear market territory. You know, every time we've been down here, it's yet to prove that it can close below that area. And ever since we've gone up. But we we've been in that sideways range here, and I think we're waiting for new news. And this is why everybody's got to watch your show every day, because you go over these earnings, you go over these stocks, because this is going to be the key. How are these companies going to respond to these higher energy prices and inflation? And if it comes out better than the market thinks, then I think we'll start seeing some real solid days in stocks. If not, if they're saying doom and gloom, then we'll have a rough road ahead.
Well, Team Countdown and I have been kind of hurting our shoulder, patting ourselves on the back, only because a year ago, January, we predicted on this show that inflation would not be transitory, simply because when you raise wages, it is really hard to start bringing them back down. And that is exactly what started to happen a year and a half ago. And sure enough, everything else falling into place with the high energy. And that was well before Ukraine. Good to see you both, Tom, Phil. Such good stuff, guys. Thank you so much. We've got breaking news right now.